Hey everyone, welcome back to the channel. If you've ever wanted a stress-free way to invest that doesn't require you to stare at stock charts all day, then index funds might just be your new best friend. Today we're going to go deep into Vanguard index funds, what they are, why are they so popular, who are they good for, the pros and cons, and which ones you can start with even if you've never invested $1 before. Let's start with the basics. What is an index fund? At its core, an index fund is like a big basket that holds lots of different stocks or bonds. Instead of buying one single stock and hoping it goes up, an index fund lets you own tiny pieces of many companies at the same time. The goal of an index fund is to track the performance of a specific market index like the S&P 500. If the index go up, your investments go up. If it goes down, your investments go down. The difference is that you don't have to try to pick which individual company will win. You just ride along with the market as a whole. Think of it like this: if the stock market were a giant sports league, buying an individual stock is like betting on one player to have a great season. But buying an index fund is like owning the entire team. Even if one player has a bad game, the rest of the team can still pull through and win. Now, who are index funds good for? Honestly, they are great for a wide range of investors. If you're brand new to investing and you don't know where to start, index funds are a solid first step because they are simple, diversified, and low maintenance. If you're someone who doesn't want to spend hours researching companies or actively trading, index funds allows you to invest passively while still getting solid returns over the long run. They are also perfect for long-term goals like retirement because over decades the market has historically gone up despite short-term ups and downs. Of course, they are not for everyone. If you're the type of investor who loves analyzing businesses and taking big swings on high growth stocks, index funds might feel too slow and steady for you. And if you're looking to get rich overnight, index funds probably aren't going to scratch that itch. But for most people, especially beginners, they check almost every box. So why are Vanguard index funds such a big deal? Vanguard is basically the pioneer of index fund investing. Back in the 1970s, a man named Jack Bogle founded Vanguard and introduced the world's first index mutual fund. At the time, people thought it was a terrible idea. Why set up for average market returns when you could hire an active manager to try to beat the market? But over time, Bogle was proven right. Most active managers failed to outperform the market after fees are taken into account. Vanguard built a reputation for having extremely low fees, a client-first approach, and a focus on long-term investing. That's why today Vanguard is one of the most trusted names in the investing world. One of the biggest reasons Vanguard index fund stands out is cost. When you invest, you have to pay an expense ratio, which is basically the annual fee for managing the fund. Vanguard is famous for keeping these fees incredibly low, sometimes as low as 0.03%. That means if you invest $10,000, you might pay just a few dollars per year in fees. Compare that to a typical mutual fund that might charge 1%. That's $100 per year on the same investment. Over decades, those savings adds up massively. Let's talk about the pros of index fund investing. First, diversification. With a single purchase, you instantly own hundreds or even thousands of companies. Second, low cost, which we just talked about. Third, they're easy to understand and maintain. There's no need to constantly check your portfolio or make complicated decisions. Fourth, historically strong returns. The S&P 500, for example, has returned about 10% per year on average over the last century. But there are also cons. Index funds will never beat the markets because they are the markets. If you want to try to outperform, you'd have to take a different approach. They also don't protect you from market downturns. When the market falls, so does your index fund. And for investors who crave excitement or quick wins, they can feel boring. But remember, boring is often good when it comes to building wealth. Now let's break down some beginner-friendly Vanguard index funds. One of the most popular is VOO, the Vanguard S&P 500 ETF. This fund tracks the S&P 500, giving you exposure to 500 of the largest US companies like Apple, Microsoft, Amazon, and Google. It's low cost, super liquid, and a great core holding. Another great option is VTI, the Vanguard Total Stock Market ETF. Instead of just the top 500 companies, VTI gives you exposure to the entire US stock market, large, mid, and small cap stocks. If you want complete market coverage, this is a solid pick. If you want international exposure, check out VXUS, the Vanguard Total International Stock ETF. This fund invests in thousands of companies outside the US, giving you global diversification. It includes both developed markets like Europe and Japan, as well as emerging markets like China and Brazil. For those who want bonds in their ETFs for stability, BND, the Vanguard Total Market ETF, is a go-to choice. It holds a wide mix of US government and corporate bonds, which can help smooth out the ride when stocks get volatile. If you're focused on dividends, Vanguard has VYM, the High Dividend Yield ETF, which targets companies with above average dividend payouts. This can be great for generating income, especially later in life. For a complete beginner, you can start with one or two funds and still be incredibly diversified. For example, a simple portfolio could be 80% VTI and 20% BND if you want some bonds. Or you could go with 60% VOO, 30% VXUS, and 10% BND for a more global mix. The beauty is, you don't need to overcomplicate it. Now, why choose Vanguard over other companies like Fidelity or Schwab? All three offer great index funds, but Vanguard's client-owned structure means they operate at cost. There are no outside shareholders pushing for higher profits. This often results in slightly lower fees and a stronger focus on the investor's best interest. Plus, their track record speaks for itself. If you're just getting started, the process is simple. Open a brokerage account with Vanguard or a platform that offers Vanguard ETFs. Decide how much you want to invest, whether it's a lump sum or a monthly contribution. Pick your fund or funds, buy your shares, and then just let them grow. Resist the urge to constantly check prices or panic when the market dips. Remember, index fund investing is a long game. One of the best things you can do is automate your investments. Set up monthly transfer into your index fund and treat it like a bill you have to pay yourself. Over time, you'll build wealth without even thinking about it. The biggest key here is patience. Index funds work best over decades, not days. The earlier you start, the more you benefit from compound growth. The magical process where your returns start earning returns of their own. So to wrap this up, Vanguard index funds are an incredible tool for anyone who wants a simple, cost-effective, and historically reliable way to build wealth. They are not flashy and they won't make you rich overnight, but if you stick with them, they can absolutely help you achieve financial independence. With that being said, thanks for watching. I hope this gave you a clear roadmap for getting started with Vanguard index funds. If you found value in this video, make sure to drop a like and subscribe for more investing tips, and I will see you on the next one.